Hey, everybody. I hope you're having a wonderful Thanksgiving, a great Thanksgiving weekend. If you're outside of the US, I hope you're having just a great regular non-holiday time. I'm Jason Hall. This is The Smattering. I'm going to be doing something a little bit different from our usual videos today, and I'm going to highlight 5 stocks that I'm incredibly thankful for. I know it's cheesy, but I really feel motivated to make this video. 5 different companies that have either done something wonderful for me and my family's wealth, or something that I expect them to do in the future. Some combination of both, I think, for a lot of them. So stay with me to spend a couple minutes going over each of these different companies. But first, just a reminder, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, please go to our special link. Go to fool.com/The Smattering. The Motley Fool is going to give you its 10 best stocks to buy right now. That's a lot of great stocks to check out. Be sure to go to that link after this video. All right, we're going to start out here with my biggest winner, Marcato Libre. In total returns, it has been the best stock that I own. It is the largest holding in my portfolio, and this goes back to the beginning of 2014. I made multiple investments in the company in 2014, then went a long number of years without adding to it, and then have added to it over the past couple of years, and it has been a massive winner. But you can see over 1,300% in gains from the year that I made my first initial investments in the company. Far better than the S&P 500. We're talking 30% in annualized total returns. That's tripling the average year for the market over its long term. So what is Marcato Libre? Probably not much about the company. I can tell most people, but this is Latin America's premier e-commerce and digital payments company. Marcato Libre, of course, its e-commerce platform, and Mercado Pago, its payments platform. Growth started to slow for the company, and the stock, of course, as we know, went down a pretty fair amount in late 2021 and most of 2022, but the stock has started to recover, largely driven by the business that is roaring back to life. Gross merchandise volume in its most recent quarter was up almost 60% currency neutral. That's the total dollar value of goods sold on its platform. 26% increase in items sold. So many good numbers. You look at revenues were up 69%, operating income soaring up 18%. This business continues to absolutely deliver incredible results for investors. I'm super thankful for Mercado Libre. I was fortunate enough to buy about a decade ago. It's been a huge winner. I think it's going to continue to be a massive winner in e-commerce and payments in Latin America. Okay, let's move on to my second stock. I'm very thankful for Meritage Homes, and for a couple reasons. You go back to 2017, this is when I added most to this stock in my portfolio. It's outperformed the S&P. It's been up and down. It's been super volatile. We know what we went through with the pandemic, with housing, and now with interest rates having skyrocketed. Initially, a lot of fears about how that would affect a business like Meritage Homes, home builders, as buyers pull back from the market. But here is the thing. I want to talk about going forward, why I'm thankful to own Meritage Homes, why I continue to own it. This is slide 5 from its most recent presentation from the third quarter. What makes Meritage Homes so appealing to me is they are heavily focused on entry-level housing, where there is a dire need in the United States for entry-level housing. And if you look at their supply of lots, total lots, and then properties, homes that they have on their books, either they're incomplete, they haven't finished building them, or they've completed them, and you see this number continues to move higher, because these spec homes, these are entry-level homes they're building. These aren't custom homes that they have a contract and they're building it to somebody's specific criteria. These are entry-level new homes, and you can see they continue to add more and more of those. They have, at the end of the third quarter, almost 5,000 spec homes in their book, and they continue to grow that number because they're razor focused on where there is the most demand and the markets that they're in, the Sun Belt and some on the West where there is massive demand. Here's another thing that I love. Their cancellation rate, as we saw interest rates skyrocket in early 2022 and then carry over to the beginning of this year, their cancellation rate skyrocketed. But those are normalizing back to historical levels. And I think that's a really healthy indicator for this best-in-class leader in developing entry-level homes. Okay, let's keep moving on. Another stock that I'm super thankful for, KNSL Capital. This one doesn't get a tremendous amount of attention from people, but man, has it been a huge winner. Again, I first bought April 5th of 2018. That was the first time I bought shares. I bought a few shares over a couple months right there at the same time. Never took a really big position, but it has become a top 5 holding for me because it has been such a massive winner in such a short period of time. And you can see that's even with this big drop off in the stock here when it reported earnings recently. It has absolutely crushed the S&P 500. You thought Mercado Libre's 30% in compounded annual growth rate was good? How about KNSL Capital? 41% in CAGR since 2018. It's a very short period of time. It's been a huge winner. Now, still crazy expensive. This is not a cheap stock, but I'm still excited about what I think that it's going to do. This is the only pure play in E&S. So the excess and surplus insurance market, this is all KNSL does. They have 1% market share. They have a tiny amount of the market. The stock crashed hard after it reported earnings here recently because growth has slowed. Michael Kehoe has been telling us, the founder of this company, CEO, has been telling us for years, growth rate was going to slow down. It was inevitable that it was going to happen. I think the long-term tailwinds are still wonderful for this business. Its ability to make money is even better because interest rates have gone up. And for insurance companies, you can actually make money on your float now without having to take on risk. You can just buy treasuries and get 5% yield. 5-year, 10-year bonds. You can start buying these things and get some good yield and get investing returns on top of those wonderful returns on underwriting that this company has been able to get. I think the future is really bright, and I'm super thankful that I bought this overpriced stock when I bought it, and that I continue to hold it. Not adding yet because it is still, I think, very expensive even with that sell-off. But man, I'm sure thankful that I've got this stock in my portfolio. All right, let's keep things going. Live Oak Bank shares. This is one that you look at the portfolio and you're like, ooh, that's not great. So first started buying shares in 2022. I've been fortunate. I did buy a little bit along the dip and the stock is making money for me. But since the first time that I bought, the stock is down. For a lot of people, you see this happen, you're going to sell and you're going to move on. I'm super thankful that I own Live Oak Bank because I understand the business and I see the incredible potential for what they're doing. I want to highlight a slide here from their most recent earnings presentation. I just want to talk a little bit about net income, net interest margin, their level of profitability. Again, we've seen it come down. Okay, we have seen it come down over the past year from 3.84% to about 3.4%, but it's starting to tick back up. There's a lot of banks out there that are seeing their net interest margin come down and not necessarily seeing it start to come back up. Here is what is slowly starting to happen for Live Oak Bank. It issues loans to small businesses. That's its entire business focus. Those loans are adjustable rate. They're gradually beginning to adjust, and they're starting to adjust up faster. Just now, that's just starting to happen. They're starting to adjust up faster than they're having to increase yields that they're paying to depositors. So you put that together, you look back at that stock chart, the stock price started to go back up a little bit. Investors are starting to realize that their formula is working. Rising interest rates are starting to help their loan book more than they're costing it to pay in deposits. That's a really healthy, wonderful thing. Live Oak Bank has really good underwriting. I am a long-term believer in what they are doing. All right, we got one more stock I want to highlight that I am very thankful to own and very thankful for what it's going to continue to do. That's Shopify. And I will tell you, if you bought more recently, this has been a great investment. Again, it's almost a double since mid-2022. That's because the company has refigured out what their goal is, how they want to do it, went through a period of time where they tried to start being the asset-heavy business. Interest rates went up and they said, this is going to be too expensive. They're not going to own the distribution centers. They exited the logistics business. We're going to be asset-light again. The market loved that decision. The stock has started to come back up. And you know what? The business has started to reaccelerate growth again. 22% GMV growth in its most recent quarter. Its revenue was up 25%, a combination of the take rate that it gets on GMV from the services that it has and also other things that it charges directly for. Free cash flow margin, 16%. This is a very profitable business. Management continues to make nimble moves to strengthen it and position it as an alternative for so many companies that want to be in e-commerce, that don't want to partner with somebody like Amazon, where they feel like they're partnering with a competition. I think this is like the Taiwan semiconductor of e-commerce. It's such a powerful, wonderful business. So there you have it, friends. There are 5 stocks that I own that I am super thankful for. I'd love to hear in the comments stocks that you own that you're super thankful for. And we'll see you on the other side of the holiday with more videos. Just another reminder, be sure to check out our special link, fool.com/The Smattering. Get even more great stock ideas. The Motley Fool's got its 10 best stocks to buy right now. Check out that link.